India, the world's fastest growing major economy, is losing momentum at the worst possible time. Few countries stand to be hit as hard if US President Donald Trump follows through on his threat of reciprocal tariffs. A trade war could exacerbate the economic slowdown, stymieing Prime Minister Narendra Modi's drive to turn the world's most populous country into a developed nation by 2047. But it could also be an opportunity for structural reform. So what lies in store for India? We thought we'd dig around. It's what we do here on Reuters Econ World. Every week, we pick a phrase or buzzword and go deep on the economic principles and ideas driving the biggest news around the world. So this week, India. I'm your host, Carmel Crimmins, in Dublin. High unemployment and weak consumer confidence have slowed India's impressive post-pandemic economic growth. The reversal of fortune is most apparent on the stock market. A 5-month losing streak saw $1 trillion wiped from the market. Things have recovered somewhat this month. Benchmark indices have rebounded, but they're still well below a record high hit in September. So is the worst behind investors, or are there more losses to come? To get under the hood of the world's 5th largest economy, I'm joined by 2 experts in their fields. From Singapore, we've Vidya Ranganathan. She's been on the pod before, explaining things like the carry trade to us. She's our editor for Finance and Markets. And from Mumbai, we've Dugal, our financial news editor for India. So, Vidya, thank you so much for joining me.
Lovely to be here. Happy to be here too.
So, I've been wanting to do a pod on India, on the Indian economy for ages. But what really drew me in this time is the stock market. This meltdown. Vidya, was there something particular that triggered it?
I would just say that the market got ahead of itself. It just got too rich. There were too many small investors chasing this rally in the hopes of making quick money. This is an economy where inflation is running high, interest rates were high, and wage growth has been weak. So small investors have been rushing into this market. As for the reasons for the sell-off, it's been a confluence of factors. And overall, we can say it's been weak earnings. You cannot have a market trading at 25 to 30 times earnings and expect to justify that in this kind of an economy. So weak earnings, the tech sector. India is, as you know, an exporter of services exports, and the tech sector globally has not exactly been doing too well in the past 6 months. Mm-hmm. Consumption. 70% of the economy is driven by consumption. And same reasons I mentioned earlier, the inflation and the high interest rates meant that the auto companies, the multinationals, the consumer companies, the Nestle's, the Godreges of India have not been able to keep pace with their earnings. And finally, the banking sector. Through those years since 2020, there's been so much of unsecured lending to the retail investor. And now it's payback time as high interest rates bite and the bad loans start to climb.
Got it.
So overall, it's been all these factors.
So it sounds to me kind of like a reality check almost. So in terms of the Indian economy, the fundamentals on the ground, the hard data, how are things?
It's not as bad as the 5-month run of losses of the stock market suggested, but they say in India that when optimism runs high, it really goes soaring high, and when there's pessimism, you're at the other extreme. So we've seen both extremes. The reality is somewhere in the middle. In our financial year 23-24, the Indian economy in real terms was growing at 9.2%. Real growth of 9.2% meant that earnings were growing nicely in the middle double digits. And then you had a slowdown. Some would say it's a cyclical slowdown after a few years of very high growth. So in the current financial year, you've seen growth come down to about 6.5%. There are cyclical elements to it. There are also some structural elements to it, such as, the weak wage growth. But that 6.5%, if you actually take out the outlier years, is not very far from the decadal averages that we've seen on real GDP growth. It is very far from the aspirational 8% growth, which I think a lot of investors were hoping India would move towards, and that hasn't happened yet. So yes, the Indian economy has slowed from its highs. Yes, it's not living up to the aspirational 8% China-like growth that investors would like to see. But is it falling off a cliff? No.
How realistic is that model of Chinese-style manufacturing-led growth for India?
So we are a very heavy services economy. 60% of the economy is services-led, but we do want to push manufacturing. In fact, that has been one of the things that Modi has been trying to do for almost a decade through various programs, whether it's Make in India or a recent production-linked incentive scheme, because we have we're the most populous country in the world. We need to create jobs for the very young population, and a lot of that will come in manufacturing to get the people coming out of the farm sector to go into manufacturing before they can get into services. So we do want manufacturing. We haven't made a success of that, but the services economy is booming. You speak to any large global company, they have a global capability center, as it's called now. Here in India, a lot of them centered in Bangalore, down south, and that's creating a lot of jobs, but not for everyone. So that's where the crux lies, that unless you get those jobs going in the manufacturing sector for the slightly less educated, you will see a two-speed economy for years to come.
And it's a difficult time. I mean, it's difficult anyway, right, to create a manufacturing-led economy, but it's probably particularly difficult now, given that we're seeing, the rise of protectionism. We're on the brink of a global trade war, right? The external conditions are not great.
Yes, I think the external conditions are just making it that much tougher. We're all in the middle of tariff uncertainty, and one of the stories we're tracking very closely is whether India, spurred by Trump, makes those tough tariff decisions. For years, we have said that we need to change our tariff structures in a way similar to China, where raw material tariffs were cut significantly, so manufacturers found it easy to manufacture in India. We haven't done that because of domestic concerns, and we are waiting to see whether Trump, sort of pushes the Modi government into doing that. There's a famous saying that India only reforms in a crisis. We're waiting to see whether this crisis brings on that reform.
It does seem to be the case that India is very much in his crosshairs. Can you sort of explain to listeners like the tariff structure that India has wrapped around its economy?
It's a really complex structure with lots of different tariff rates. We've protected certain sectors like agriculture, which are politically sensitive, also economically sensitive. So unraveling this is actually going to take a lot.
But so, Ira, what exactly is Modi doing to head off the threat of tariffs from Trump?
Discussions are underway. We are awaiting a final roadmap and a final plan. I think there is clarity, and we have reported here at Reuters that there will be tariff reductions.
Mm-hmm.
What is being awaited is whether these tariff reductions would be broad enough to qualify as reform, or would they tinker. So far, what we have seen, we saw in the budget, just some tinkering. That's certainly not going to be enough, perhaps, to convince the Trump administration. It also doesn't do any, sort of move the needle economically. On the other side, what they are thinking of, and at least there was one comment from a government minister, is that do you need some sort of export subsidies to support your exporters?
Right.
Now, India is not a very heavily export-dependent economy, but some of these sectors, textiles, leather, they're very labor-intensive. So if these sectors, face headwinds exporting into the US, I think there may be some subsidies required to protect the employment that these sectors generate. So those are the two lines of thought. I think, like everywhere else, April 2nd is the deadline, and somewhere before that, we will know.
Vidya, what sort of impact has the stock market meltdown had locally? A lot of local investors went hard into the stock market.
Yeah, absolutely. There was also a loosening of some of the derivatives trading rules in India last year, and the retail crowd absolutely jumped on it. And from what we're hearing from brokers and retail investors is now with the stock market crash, they're putting on hold all of the spending plans. They've stopped buying houses. The auto sales show that the sales are falling. And brokers say the retail investors are now rethinking their decision to open all these accounts, and retail trading volume is down 30% in some cases.
Is that reluctance to spend among stock investors nursing losses? Is that showing up yet in the hard data era?
We're starting to see very early signs of it. The auto data, as Vidya mentioned, has shown some weakness. We will know in the next few months whether this is spilling over. What the government had done in this annual budget, though, they had made tax changes, which will mean a significant amount of relief for consumers. So you may see a little bit of balancing out. The net effect may not be as much. But of course, if the slump continues, there will be some adverse wealth effect. Wealth effect in India has not been very well understood. In fact, this will be one of the best tests. So if we see an extended slump, although we've seen a bit of a pullback in the markets in the last week or so, but if the slump extends, I do think there would be consumption weakness, which would show up in the hard data, the macro data as well.
How do things feel in Mumbai? There was a sense of exuberance before, right? India was booming.
It absolutely was. In fact, large parts of India, are very, very poor, but there are some parts, the Mumbais, the Delhis, where there is a lot of wealth. So there is a section of India which is still doing very well. These are the people in technology, in finance, the well-educated, the well-heeled, well-invested. They're seeing their wealth boom. They are consuming a large amount. But I think it's been said for years and years that you can't only depend on that one small segment, that the people coming into that, sort of middle class, although there is no official definition of the middle class, to be honest. So we use that term very, very widely. But, the spending capacity of a wider number of Indians has to improve, and that has not happened. So we are very much still a two-speed economy, and people like the World Inequality Lab claim that inequality has widened. The Modi government counters that with their data, but that there are two Indias is very clear in everything from macro data to corporate earnings.
Nowhere is India's two-speed economy more apparent than in the luxury car market. Despite the slowdown in economic growth, sales of Lamborghinis and Mercedes Maybachs are at record levels. Aditi Shah covers India's auto market from New Delhi. Aditi, who's doing the buying here? Who's buying these luxury cars?
So there's been this complete shift in buying patterns in India, especially luxury. There was a time when it was traditional old wealth, the billionaires and the family businesses that started off, and once you reach a certain level, you'd buy it. Now you've got sort of the younger generation that's coming in and taking over the business, and they've studied abroad. They're exposed to these brands and these cars and the lifestyle, actually just the whole luxury lifestyle. And they are about younger than 40 years old most of the time, and these are the guys that are buying into a lot of luxury, not just cars but especially cars. And so that's one section. And then you've got sort of a growing breed of startup entrepreneurs and executives in India. And we've seen over the last few years a bit of a successful run of these startups when they've listed on the stock exchange, and some of these guys have made a lot of money. And these are the ones that are now, this is the new wealth sort of that's buying into the luxury.
Has the recent stock market slump affected the outlook for luxury car sales?
So I think at the very top end of luxury, I think that's completely unaffected, wherever inflation goes in India, or however the stock market moves, or, how much ever wealth people make or don't make. I think there is a certain section of people that will still continue to do well, and they will continue to sell. I mean, these are the sort of cars that cost about, if you talk about Lamborghini, about $500,000, right?
Yeah.
And the average price of a car in India is still about $15,000 to $20,000. So, you're looking at sort of that kind of gap. So, of course, the numbers will be small. When Lamborghini says they had their best year in India, they only sold about 113 cars, but it was still a growth, over the previous year of 10%.
Now, the big cities in India are quite congested. Like, when do they get the chance to actually really rev up these machines and let them go? I mean, it must be difficult.
Yes, actually, interesting question, because they're only able to do this in the dead of the night, right? When you don't have a lot of traffic on the roads. I mean, Delhi traffic is still okay, I think, for most parts, except for peak hours. But when you look at Mumbai and cities like Bangalore, they're sort of, just bumper to bumper traffic most of the time. So the only time you can do it is at 3 a.m. in the morning, perhaps, where you can actually speed up that car and hear the sound of the engine and feel the goosebumps that you want to, the reason for which you bought the car.
Ira, there's a huge challenge, isn't there, with more people coming into the labour force from rural areas at a time when the farming sector, with its high tariffs, is under threat.
It is, which is why they're very cautious about sectors like textiles, leather, agriculture to some extent. But yes, the lack of adequate job opportunities is one key reason why India will not be rushing to open the doors to the world. They will continue to protect certain sectors. And I think our reporting suggesting that at least agriculture, for instance, where tariffs are very high, they will not go in that direction. It is about the employment, but it is also about the political heft of the farming community in India. They're a politically very sort of influential community.
And Vidya, the money the foreign money, at least, that's leaving India, it seems to be going to China, right?
So within Asia, at least, and the bulk of the money coming into Asia is from these index following funds. And if you have to sell India, you have to put it in Asia, somewhere in Asia. And it's not just India, it's Southeast Asia, Indonesia, Philippines, Thailand. All of them are feeling this giant sucking sound from China, where China, ever since DeepSeek made this very flashy debut, has been, and the valuations in China are super attractive. And there is this whole promise.
They're cheap, basically.
Yeah, they're very cheap. And there's this promise of a stimulus, which has dogged investors for 3-4 years. But at least now there is, they can smell it, the smell recovery, and then they're putting more money into China right now. There's also a little bit of money going into Japan, where people think that the corporate reform program still has impetus. But for global investors, Europe has become suddenly a very attractive destination too, after Germany's splashy fiscal spending on defense and those plans. So there's a lot of money going into Europe, China, and Japan.
And, when we think of Trump and we think of tariffs, I mean, even if he doesn't, hit India hard, the impact of what he's doing on China means that a lot of Chinese goods are flooding into other markets, right? Including India. That's also another kind of pressure point, isn't it?
Absolutely. That's the other risk. And the steel sector has seen this play out for the last 8 to 12 months, where imports have come flooding in. It's hurt domestic production. We've just seen a recommendation of a safeguard duty on certain kinds of steel imports. So certainly that is a risk. And again, India and China have a very sort of tenuous balance in their relationship, whether it's on the border, whether it's on trade. Just about 6 months back, we had started to see some easing of the border tensions, and there was a hope that that will then filter through to trade and investment. But if India tends to be very aggressive in terms of imposing safeguard duties on goods coming in from China, we don't know how far that will go. We actually had our chief economic advisor make a very sort of contentious statement a few months back, saying that India needs investment from China and needs to draw investments from China. There was a huge pushback against that, but that's true. We do need the money. So I think, there are two pulls and pressures. One, the tariff side on the US. Two, the tariff side on China, and what that as a fallout means for India.
Is there any sense that Trump and his trade threats are kind of the kick that India might need, that this could be a golden opportunity?
I don't think they needed Trump. I think the realization dawned on them pretty early, and you saw they changed the RBI governor, put in place a bureaucrat who was going to quickly cut rates and flood the system with money. So I think authorities in India are well aware of what the fixes that are needed.
I would tend to agree. The domestic side, I think they realized that policies had been tightened too far, so they've cut the taxes. There's been monetary easing, so you will see some of that impact play out on the local consumption demand story. On the external front, yes, Trump could very much be the reason why they're forced into taking some politically difficult decisions, and they may be able to explain them away to the local constituencies by saying that we had no option.
Yeah.
That's the best case scenario.
A big thank you to Ira, Vidya, Aditi, and everyone who covers economics and markets at Reuters. Sound design, music composition, and engineering on this episode was by Alex Summer. Our podcast team includes Kim Vanell, Tara Oakes, Gail Issa, Christopher Walljasper, Jonah Green, David Spencer, and Sharon Reich Garson. Our executive producer is Leela de Kretzer. Remember, for all your daily news, check out our weekday show, Reuters World News. You can catch it on the Reuters app or wherever you listen to your podcasts.